Hello viewers, welcome to my channel. I am Hashim Ali Khan. Already we have completed 16 problems on calculation of tax liability residential status. So presently the topic going on is income tax 1 for the assessment year 2021. So already I have uploaded so many videos explaining the provisions of Income Tax Act regarding the computation of tax liability, and already 16 problems I have completed. If you have watched carefully with full concentration, you got the idea how to calculate the income tax for the current assessment year. Now I am proceeding to the next problem, problem number 17. But before that, if you have not watched the earlier videos, go to the playlist of my channel. Select the subject Income Tax 1 for the assessment year 2021 and watch the previous videos, and then only you can be able to understand now. If you join in the middle without watching the earlier videos, it will be difficult for you. So keep a rhythm of watching continuously one after the other. You will get the complete grasp on the subject. So before starting the next problem, problem number 17, I expect my viewers to have a printout of the problems which I have given in the link under my description. So keep this printout ready before watching the problem. Now, problem number 17. Mr. Bhaskar, born in Mumbai on 15th June 1984, left for Canada on 14th May 2019. So during our current previous year 1920, he left for Canada on 14th May and never returned so far. He went on 14th May 2019 and later on he never returned back to India. Determine his residential status as resident or not resident for the current previous year 2019-20. So for the finding out the residential status, we have to find out how many days the assessee stayed in India during the current previous year. The current previous year will begin from 1st April 2019 to 31st March 2020. This is the current previous year. How many days he stayed in India during the current previous year, we have to find out. So on 14th May 2019 he left and he never returned back. So now see the solution here. Current previous year 1920 from 1/4/2019 to 31st March 2020. Number of days the assessee stayed in India during the current previous year. April. Our previous year begins from April. So the whole of April he was in India. April 30 days. May 14th he left for Canada. May 14th. So 14 days he stayed in India in the month of May. So April 30 days, May 14 days. Total number of days are 44 days. So during the whole previous year, he stayed in India for 44 days only. The assessee Mr. Bhaskar does not satisfy the basic condition of 182 days. The first basic condition says the assessee must stay in India for a period of 182 days during the current previous year. And during the current previous year, so he is a non-resident for the current assessment year 2019-20. He has not satisfied the basic condition, 182 days. He comes under a special category because he is an Indian citizen who is going abroad on employment basis, on profession basis. The first basic condition only will apply, that is 182 days or more he should stay in India, then only he will become resident. If less than 182 days he stay, he will be a non-resident. So he is a non-resident. That's all. Now 18th problem. Mr. Akash, an Indian citizen who is appointed as a senior scientific officer by government of Kenya, left India for the first time on 26th September 2018 for joining his duties in Kenya. During the previous year 2019-20, he came to India for 160 days. Determine his residential status for the assessment year 2021. Specifically given in the problem that during the current previous year he came to India and stayed for 160 days. He comes under special category. Special category means he is an Indian citizen who is working abroad, who is appointed as a senior scientific officer. He is working abroad and came to India during the previous year for a visit. And again after staying some period, he left India. So only first basic condition will apply, 182 days. If he stays in India for 182 days or more, then only he will be a resident. If he stay for less than 182 days during the previous year, he will be a non-resident. So here you can see the assessee Mr. Akash is an Indian citizen working abroad, so he comes under the special category. So only the first basic condition of 182 days will apply. During the previous year 1920, he stayed in India only for 160 days, less than 182 days. He is not satisfying the basic condition, so naturally he will be a non-resident. Mr. Akash will be a non-resident during the previous year 2019-20 or the assessment year 2021. He does not satisfy the first basic condition of 182 days, hence Mr. Akash is a non-resident for 2019-20. That's it. Now, 19th problem. A Hindu undivided family is living in Kanpur. Karta of the family visited Singapore from 5th October 2019 to 1st July 2020. Determine his residential status for the assessment year 2021. So far we have done the problems on individual. Now this is the first problem on residential status of HUF. So before starting, I will give the provision how to find out the residential status of HUF. Already I have explained you in detail in the first 5 videos on determining the residential status of HUF. If you have watched those videos, definitely you understood the provisions regarding how to determine residential status of HUF. And HUF may be ordinary resident, not ordinary resident or non-resident. Again, we have to satisfy the basic condition. The basic condition says if the control and management of HUF is wholly in India or partly in India and partly outside India, then HUF is a resident. Either it should be wholly in India, control and management. Basic condition says control and management should be either wholly in India or partly in India and partly outside India, then HUF will be called resident HUF. If the control and management is completely outside India, then the HUF will be non-resident HUF. Once if we have decided whether it is a resident or non-resident, then we have to go for additional conditions. Additional conditions will be applied only if it is a resident. If it is a non-resident HUF, additional condition will not apply. So what are the additional condition? Same additional condition what we have seen for individual. That means the first additional conditions must be a resident in 2 out of 10 previous years preceding the relevant previous year. Second additional condition must stay in India for 730 days or more during 7 years preceding the relevant previous year. These 2 additional conditions must be satisfied by Karta. So if Karta satisfies these 2 additional conditions, then the HUF will be called resident and ordinary resident. If the Karta does not satisfy these 2 additional conditions, then the HUF will be called resident but not ordinary resident. If the basic condition itself is not satisfied, it will be a non-resident. These are the provisions. Now in our problem, basic condition, the place of control and management. It is partly in India and partly outside India, so the HUF is resident. In the problem it is given that the Karta visited Singapore from 5th October 2019 to 1/7/2020. That means up to 5th October 2019 it was managed from India. After 5th October 2019 it is managed outside India. So partly control and management is in India and partly outside India. So it is a resident HUF. It's a resident HUF. Now in the absence of other data related information, it can be assumed that the other information is not given in the problem regarding the status of Karta. Whether Karta satisfies both the additional conditions or not given in the problem. So we'll make the assumption. What assumption? Karta satisfies the first basic condition. Karta is resident in 2 out of 10 years preceding the current previous year. Karta satisfies the first additional condition, that he is a resident in 2 out of 10 previous years preceding the relevant previous year. Second, stayed in India for more than 730 days in 7 years preceding the current previous year. It is assumed that Karta stayed for more than 730 days in 7 years preceding the relevant previous year, current previous year. दोनों कंडीशन कर्ता satisfy कर लिया, suppose करेंगे, imagine करेंगे. That means the HUF is a resident and karta satisfies both the additional conditions. So HUF will be resident and ordinarily resident. Hence the residential status of the SSC is resident and ordinarily resident for the current previous year 2019-20. That's it. So this is the first problem where HUF residential status is determined. Basic condition, control and management must be wholly or partly in India, then it is a resident. If the control and management is completely outside India, it's a non-resident. Suppose if the HUF is resident, then we have to see whether it is ordinary or not ordinary. For checking that, these two additional conditions are there. These conditions must be satisfied by karta. If karta is satisfied, it's an ordinary resident. If karta does not satisfy these two additional conditions, it is not ordinarily resident. That's it. So this is 19th problem. Now 20th problem. Mr. KK is the karta of HUF. Determine the residential status for the previous year 2019-20 in the following situations. A, B, C. Three situations are given. I'll read out the situation and we decide the residential status of HUF. Business is wholly managed from Tokyo, Japan. The HUF business is in India, but the business is completely managed, controlled from Tokyo. That means the complete control and management is outside India. So this HUF is a non-resident HUF. The HUF is a non. Because the control and management is completely outside India. Second, business is wholly managed from India and the karta never went outside India for the last 25 years. The HUF is completely controlled from India. That means it's a resident HUF. Now the karta satisfies both the additional conditions because for the last 25 years he never went outside India. He never went out of India. That means he satisfies the first basic condition. He is a resident in 2 out of 10 previous years. He stays more than 730 days during the 7 years preceding the relevant previous year. He satisfies both the additional conditions. So the HUF is a resident and ordinarily resident. The HUF is resident and ordinary resident for the previous year 2019-20. Third case, 7 months managed from India and remaining period managed from outside India. Partly in India, partly outside India. And karta is resident for the last 10 years. For the last 10 years, the karta is fully resident in India. That means he satisfies both the additional conditions. So first of all, control and management is partly in India and partly outside India. So it's a resident HUF. The karta satisfies both the additional condition. So it is ordinarily resident HUF. The HUF is resident and ordinary resident for the current previous year 2019-20. That's it. This is the end of problem number 20. Now see the problem number 21. Determine the residential status of a limited company in the following situations. Again, previous problem was HUF. Now it's a joint stock company, limited company. The provision of Income Tax Act regarding determination of residential status of a company already I have explained in the theory video. So if you have watched that video, you got the idea about how to determine the residential status of a company. First of all the companies incorporated in India, irrespective from where it is controlled or managed, are Indian companies, are resident companies. All the companies which are incorporated in India, from wherever it is controlled, whether it is controlled from India or outside India, managed from India or outside India, all companies incorporated in India are resident companies. Now the companies which are not incorporated in India, whether it is incorporated outside India, then we have to see the control and management. If a company is not incorporated in India, but controlled and management is wholly in India, control and management is wholly in India, then only it will become a resident company. Suppose if the company is incorporated outside India and managed and controlled also outside India, non-resident company. Similarly, a company incorporated outside India but partly managed and controlled from India and partly from outside India, it is also a non-resident. It is also a non-resident. Resident तभी होगा जब उसका control and management is completely in India. These are the provisions for determining the residential status of a joint stock company. Already I have explained, again I have explained now. Now 5 points are given. In each point we have to decide whether it is a resident or non-resident. First, residential status of a limited company incorporated in India and managed from India. First question. A company incorporated in India and managed in India, it's a resident company. Once it is incorporated in India, forget about where it is managed. It is Indian. It's a resident company. Second, incorporated in India and managed from outside India. Forget about managed. Once it is incorporated in India, it is a resident company. Irrespective whether it is managed in India or outside India. Once incorporated in India, it's a resident. So resident. Incorporated out of India but managed from India. That means it's a company which is incorporated out of India but managed completely from India. It's a resident company. Because complete management control is there in India. It's a resident. Now, incorporated out of India and managed out of India, it's a non-resident company. Because incorporation outside India and completely managed outside India, it's a non-resident. Last one, incorporated out of India but managed partly from India and partly from foreign country. Just now I told you, if it is incorporated out of India and partly managed in India and partly outside India, it will be a non-resident company. It will be a non-resident. Resident तभी होगा when the managed, control and management is completely in India. Then only it will be resident. If it is partly in India, partly outside India, it's a non-resident. Last one, non-resident. So this is the end of problem number 21. Come on, now we'll do the last and final problem on these tax calculations and residential status incidence of tax. The final problem, 22nd problem I am going to do now. Now, see carefully. Mr. Anil furnished the following particulars of his income for the previous year ended 31st March 2020. You are required to calculate the total income if he is ordinarily resident, not ordinarily resident or non-resident. So we have to compute the total income of this SSC under 3 different situations. If he is a resident, how much total income? If he is not ordinarily resident, how much income? And if he is a non-resident, how much is the income? That means the incidence of tax. Which income should be included? Which income should not be included? So for this purpose, you remember one point. For ordinarily resident person, the global income is taxable. That means the Indian income as well as foreign income. Any income is fully taxable in case of ordinarily resident person. He is staying in India, he is already resident. In his name, if any income is generating in America or England or Australia, anywhere throughout the world, he has to pay the tax in India because he is ordinarily resident. For not ordinarily resident person, only Indian income is taxable, foreign income is exempted, not taxable, except in one case. If he is having a business outside India and that business is controlled from India, then the income which is earned outside India is a foreign income, but he is liable to pay tax because he is not ordinarily resident person. If he is a non-resident, only Indian income is taxable, foreign income is completely exempt. These are the rules regarding taxability, incidence of tax, scope of tax. Now, in our case, one by one we'll study. First, we have drawn 3 columns: ordinary resident, not ordinary resident, and non-resident. 3 columns at the extreme right hand side. Now, one by one incomes we'll take. First income, salary received from the government of India. Salary received from government of India, 8,40,000. This is the income which is generated in India, earned in India, accrued in India, and received in India. So it is an Indian income. The income is generated in India. So any income which is generated in India, it's an Indian income. So when it is an Indian income, it is all taxable in the hands of ordinary, not ordinary, non-resident. For everybody, Indian income is fully taxable. So 8,40,000 we have taken in all that. Even in case of non-resident. Because non-resident has to pay tax on Indian income. So here it is an Indian income. So taxable in the hands of all the assessors. So remember one point. If it is an Indian income, it is taxable in the hands of all SSCs, whether ordinary resident, not ordinary resident, or non-resident. If it is an Indian income. Second, salary received from Paris or salary received in Paris for services rendered in Indian embassy, 5 lakh. So India has made an embassy in Paris. So there in Paris, some employees are appointed by India and salary is paid by Indian government to the employees who are rendering services in Indian embassy in Paris. Income is generated in India. Even if it is received outside India, it's an Indian income. Because the income, the salary is paid by Indian government. So salary is generated, income is generated from India. So it is an Indian income. Salary received from Paris for services rendered in Indian embassy, it's an Indian income. So taxable in all the cases. Indian income, it will be taxable in the hands of every SSC, ordinary, not ordinary, non-resident. Third, income from property situated in Kurnool. Kurnool is one of the town in India. So when income from house property is generated in Kurnool, Kurnool is in India. So it is ordinary, it is Indian income. When Indian income, taxable in all. So income from property situated in Kurnool, Indian income 140, 140, 140. Next, income from cultivation of land situated in Bangladesh. So income from land earned in Bangladesh, it's a foreign income. It is a foreign income. The foreign income is taxable only in the hands of ordinary resident person. If the status is ordinarily resident person, then even foreign income is taxable. So this Bangladesh income, it is taxable in the hands of ordinary resident. It is not taxable in the case of not ordinary and non-resident. Next, dividend received on shares of a limited company incorporated in London and having a branches in India, 3,60,000. It's a foreign income because it was incorporated in London. Only branches are there in India. So it's a foreign company. So income earned outside India, that is a foreign income. It is taxable only in the hands of ordinary resident. It is not taxable in the hands of not ordinary and non-resident. Next one, interest received 1,50,000 on the debenture of Charminar Limited, India. So company is in India. So any interest received from Indian company is an Indian income. So Indian income taxable in the hands of all, 1,50,000, 1,50,000, 1,50,000. Next one, salary received in India for services rendered in Sudan. Services are rendered in Sudan, but ultimately salary is received directly in India. So any income which is earned outside India, but if it is received in India, it's an Indian income. If the salary is received there itself in Sudan, that means income earned in Sudan, received in Sudan is a foreign income. But if income is earned in Sudan but received directly in India, it's an Indian income. It is taxable in the case of all. 2 lakh, 2 lakh, 2 lakh. Last and final, rupees 1,80,000 dividend received on the shares of foreign company which is controlled from India. So it's an Indian income. So it is taxable in the hands of all. Ordinary, not ordinary, non-resident. So the total income if the SSC is ordinarily resident is 27,70,000. If the status is not ordinarily resident, 20,10,000. If the status is non-resident, the total income is 20,10,000. That's it. So this is the computation of total income under the 3 circumstances. So totally 22 problems I have explained you on computation of tax liability, residential status, incidence of tax. So if you have watched the first 5 videos on theory regarding the introduction or basic provisions of how to compute the tax liability, what are the different categories of SSCs, what is the exemption limit, and what are the provision regarding residential status, then definitely you can be able to solve the problem. If you skip the first 5 videos, then definitely these problems will be very, very difficult. So in order to get a good grasp, I suggest you to watch the video from beginning till end. Don't skip in between, and watch the video in the series, in the serial order, first, second, third, like that. Then only you can be able to get the grasp. It is unlike the other subject. The other subject like cost accounting, advanced accounting, financial accounting, each chapter will be independent, different. Even if you skip the first chapter, you can study the second chapter. But in the case of income tax, if you do not understand the first introductory part, then second unit, third unit, you cannot be able to follow. So you have to keep a rhythm of first video, second video, third video. So for your getting a good grasp on the subject, I am explaining you, I am giving these suggestions to you. If you follow, definitely you can enjoy the subject of income tax. Otherwise, it will be a panic in your mind that this subject will be a difficult subject. It is not at all difficult. I am explaining time to time, I am repeating the same provisions so that you can be able to absorb in your mind. So okay, in the next video, I will start the income from salary, the main head of income. So if you are satisfied with my lecture, give a like to the video. Give your comments, feedback about the about these lectures. Share this channel in your friend circle, in your group, so that more students can watch the videos. And don't forget to subscribe to my channel if you have not yet subscribed. Okay, we'll continue in the next video, the next topic, income from salary. So keep watching, keep gaining the knowledge.